The Federal Reserve is set to meet on Wednesday, and speculation is growing that silver will surge on falling real yields. The logic is that the SVB crisis will send yields lower on less aggressive Fed rate expectations, but with inflation remaining relatively elevated, then real yields should tumble. This would send silver and gold higher, as generally speaking, falling real yields and a falling US dollar are normally very positive factors for gold and silver gains. Notice that silver just sits at this key support level around the $20 region. Furthermore, also note that the gold-silver ratio is very high, and silver tends to gain disproportionately to gold when the gold-silver ratio is very high. Do see the link in the text for more information on using the gold-silver ratio. So with the Fed meeting ahead, there is the potential for silver to gain. Also notice the event studies, the seasonality, that silver tends to gain into the Fed meeting. Over the last 25 years, across 200 Federal Reserve meetings, silver has tended to gain into the meeting. And if you look at it over the last 55 years, it's also tended to gain out of the Federal Reserve meeting. Major trade risk. The major trade risk here, of course, is that the US dollar sees bids if the risk turns very negative. There's a lot of concern knocking around markets at the moment, particularly surrounding the SVB crisis and the risks of contagion. They seem to be contained, but that situation could change quickly. Alternatively, a very high US CPI print could also send US yields higher. Remember, HYCM clients can access this CSNX product in order to analyze over 25,000 different currency pairs, indices, commodities, as well as individual stocks. Please do contact your account manager for a free trial and get started right away. Certain products and services mentioned herein may or may not be available to all clients, depending on which HYCM Capital Markets Group entity their trading account adheres to.